Good morning, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah. Let's take stock of the global news flow first before we dive into what could happen to our markets. So, Asian markets have risen as Wall Street has come off a winning day. Nothing major, but in the green, over 0.5%, which is good news. Gold is steady after a modest advance as treasury yields have declined. Sugar is heading towards 2-month highs on concern over Indian exports. And in business news, interesting news, OpenAI has unveiled ChatGPT for business, stepping up the revenue push. More importantly, independent of what it does for OpenAI per se, the fact that AI-related tools are now opening up for business as well is looking very, very interesting. So what did the US markets have done? Well, let's pull them up. Like I said, 0.7, 0.8% uptick. So 0.8% for the NASDAQ, 0.63% for the S&P 500. And yields in particular, we need to pull up the next plate because yields are now below 4.20, 4.18. Volatility steady, dollar index steady at 104 odd mark. The yield below 4.20. That's interesting. In fact, we've, on August 21st, I think ISEC put out a note, and I'll get you that note today. But in that, ISEC is saying that we don't believe that yields will necessarily stay higher and the implications for FPI flows. We'll get to that in a moment. The GIFT Nifty should be indicating a flattish to a marginally positive start. Independent of what this does, I think we probably are set for not a bad day yet again. We did have a bit of a gain yesterday, by the way. So, what happened yesterday is that the Nifty 50 gained about 40 points to close at about 19,306, which is 0.21%. Bank Nifty increased by 0.6%, led by Federal Bank and PNB. The broader indices ended positive. The Nifty Mid Cap 100 was up about 0.5%. Small Cap was up about 0.74%. IT and the FMCG were the only two indices to end in the red per se. But essentially, we had a good day in trade yesterday. Can we see a continuation of that today? Is the key question on trade setup. Well, before we get to what could happen on the positive side, I'm glad that quant indicators thus far have been strongly suggesting no leverage shorts. And I think that trade has worked well thus far because frankly, we haven't had a trending day downwards either. So much as people would have believed that there could be a sharp downtake, leverage shorts would not have worked for sure. And the pullback yesterday, possibly a kind of meandering outlook today could do well. The problem with the market currently is, or in at least in today's session or otherwise, is that the monsoon is now playing the errand, and as a result of which the positive sentiment, if any, could get clouded further because people might believe this might be inflationary in nature, might force the RBI's hands, so on and so forth. That whole dialogue might come into play, and rightly so, by the way. I'm just saying that monsoon is kind of clouding the sentiment a little bit. The highest put OI though has, for this expiry, has swapped from Friday. Remember Friday when I was talking about this yesterday, I was saying that 19,000 has very large OI and 19,300 was the next. Now there's a bit of a swap there. 19,300 is again the largest OI, so there's a strong support at that level. Should that break, there could be a swift domino effect downwards to 19,000 maybe, but for now 19,300 likely the strong support. I'm using this as an example. The Tita corrected 4% yesterday. We highlighted that the wagon manufacturers' data wasn't the strongest, and therefore there could be a bit of a corrective move there. But the others, Nexrail, Railtel, by railway stocks, I don't just mean wagon stocks. Everything related to railways is actually finding a lot of favor. Yesterday, you saw Texrail up 11%, 12%, Railtel going up 15% because of those commentary on cover. Just shows that that pocket is finding a lot of favor. For a stock to go up 15% means there was large fresh buying on the cash side. Rated is a cash stock that would have happened, and just shows the optimism that people have in these companies even after they've risen so much. Remains a pocket to certainly monitor. Okay, now having said all of this, what are the stocks to watch? Well, some price and volume buzzers from yesterday's session first to bring up. And these are liquid names, and therefore I'm bringing these. There will be others which would have done more as well. Like I said, Railtel, for example. But Renewables Housing, 11% higher, volumes much higher. Piramal Enterprises, 4.5% higher, 2 times volumes because of their investor day. GNFC, and GNFC, GSFC, GMDC, that whole bucket of Gujarat PSUs did very well yesterday. Glenmark Pharma up 4%, nearly 4% on good volumes, and Vodafone Idea continues to chug higher, 3.5% higher, on nearly 3 times volumes. So watch out for these. Now, three things which I haven't given, and I'll start off with them first and then move on to specific stocks as well. Steel companies. So there's that whole talk across media about steel companies having increased long product prices. Keep in mind, even if that is true, the list prices may have increased, but from what we gather, and my analyst Rishi has spoken to some of the steel companies, that they are still selling it, the long products at a discount. So there's no material benefit that is coming to the steel companies. Please keep that in mind. If you're trading steel stocks on this news that they have hiked prices, the stocks may still move, but I'm just laying the caveat out there. The companies are actually not selling at the higher prices. If indeed the prices are moved higher, they're still selling at a discount. And APL Apollo block might happen today, as per other media. I don't have confirmation of the same, but I'm just laying it out there so that and apparently happening at just around 1600. But what I hear is that there's a lot of appetite for APL Apollo block, and the stock may actually absorb that supply very, very quickly. So be mindful of that. There is also a Zomato block that is on the anvil from SoftBank. You never know, that could also happen today. Be mindful that a block had happened yesterday for Zomato. There will be some more that could happen today. And I'll come to Zomato in a moment. Now, continuing with the list of stocks to monitor, Hindustan Construction Company. They have said that there are exclusive talks or discussions with Damatio Par. I believe that's the pronunciation. But it's a company headquartered in France for the sale of Steiner Construction SA, a material subsidiary of the company. I would reckon that the street might view this positively. The stock has gained 40% in less than a month, I think. And there has to be good reason. This decision will be taken on the 30th. There is some meet on the 30th in which HCC will announce this discussion formally, maybe. But they've made an exchange release. Interesting announcement. Do watch out for this. Gokaldas Exports, the very interesting acquisition. They've acquired UAE-based Atraco Group, a leading manufacturer of apparel, for $55 million. The acquisition will be funded by a mix of debt and internal accruals. Remember, textile companies haven't had a really great last 9 months. The last quarter for select companies was very strong. There is a lot of talk of restocking demand happening, and Gokaldas doing this is a very it's at a very interesting time that they've announced this, and which is actually a pretty good thing. So do watch out for that one as well. So here's the deal, right? Agreement to acquire a Atraco Group, which is a leading manufacturer of apparel with a strong market position and customer relationships across US and Europe. This, I think, goes in Gokaldas, the MD, I think, has said that they are excited to welcome Aramco's leadership team, their employees, and their global customers, most importantly. So a pretty interesting announcement there. We'll try and talk to the management today. SJVN is the other one. They've won a flurry of orders, and there's one more here. They've bagged a deal from APDCL for 3 solar projects of cumulative capacity of 320 megawatts in Assam. The cost of the projects is 1,900 crores. So one more shot in the arm for SJVN. Tata Motors could be interesting. JLR's Eurobond due July 28th is likely posted its biggest rise since March 21st, according to Bloomberg compiled prices. Yesterday, as of 3:30 p.m. London time, the stock was trading, this bond was trading materially higher, and I reckon it would have closed that high. So do watch out for Tata Motors. This could be slight positive. Sun Pharma, they expect high single-digit FY24 consolidated top-line growth. Some other constructive comments that have come in as well. Do watch out for this one. This is happening at a time when there has been a bit of a downgrade from, I think, HSBC on Dr. Reddy's and some other pharma companies, I think. But, well, not bad, actually, the commentary from Sun Pharma, not just on this, but other aspects as well. So do watch out for this one. Now I was talking about Zomato. Tiger Global's Internet Fund 3PT sold about 12.25 crore shares or 1.4% stake at 91 apiece. Buyers included SocGen, Kotak Funds India Midcap Fund, Axis Mutual Fund, Morgan Stanley, amongst the others. And there is other news as per IFR, Swiggy seeking to raise at least $600 million in the IPO. Of course, we don't know the valuation, but I presume that these stocks are finding favor. The timing of Swiggy, whenever they do the IPO, means that they also believe there is demand, and you can see by the virtue of the fact that the stock has done so well, Zomato. There are buyers out there readily available for the stake, and the announcements that they have made that they are doing a delivery fee as well just shows that they are now feeling confident about the model, and could be very interesting times for Zomato. I mean, it was really interesting when Zomato was not so high. We did that really lovely conversation with Sanjeev Bikhchandani and Pankaj Murarka of Renaissance Investment Managers on Insight, a series that we did about a couple of months back. But in Sanjeev explains the rationale behind his confidence around business models like Zomato. And then Pankaj, of course, as a co-anchor and as a professional investor, kind of brings his insights both in the questions and in his view on why companies like Zomato or some of the others could stand a chance. So I think it's worth hearing that conversation. You might want to tune in at some point of time on YouTube today or our website today or Twitter today and try and hear that conversation. Okay, Virat has brought it up. Okay, maybe not able to quite go there. Yeah, but this is the conversation that we're talking about. That you can go on Insight and Pankaj Murarka, Insight and Sanjeev Bikhchandani, and that might give you this piece. Okay, some bulk deals. Star Health Fidelity's EM fund has bought about 12.37 million shares. So that's one. There was also one on Zomato, which I've already put out, and there's one more which I'm missing out. But anyways, these two seem to be the more important one. And then lastly, a couple of interesting pieces from brokerages. So on 21st August, ISEC put out a note on yields. They say, and FPI flows. They said FPI outflows likely to be short-lived as spike in the US 10-year bond yields take it to the upper end of the range seen over the past year, although it does not indicate a breakout. So both fundamentally and technically, ISEC was of the opinion that there will not be a material breakout of the 10-year yields. They might cool off at some point of time, and therefore FPI outflows, which have been there for the last few days, may not necessarily last. Let's see if they turn out to be true. On the other hand, Sanjeev Prasad of Kotak is not all that constructive on markets at large. He says we see low potential returns for the market over the next 2-3 years based on bottom-up assessment of sectors on our 3x3 matrix of earnings and multiples. He says most sectors fall in the growing earnings, derating in multiples sell. Current economic and market conditions are not very different from 5 years ago. The Nifty 50 index has gone up 67% in the past 5 years. Well, interesting. Sanjeev Prasad is not that constructive on markets. Didn't seem that he's bearish as a result of this, but as multiple people have said, that the market by itself may do what it does and not necessarily go up too much, 3, 4, 5%, but bottom-up sectors have the potential to do well. So my urge to you as we wind up trade setup today is that whenever you hear market calls talking about the Nifty being sideways, that's not necessarily bad. If indeed Nifty remains sideways, by the way. BofA says that it will be 20,500 by December, which is not that big a move, 5% in the current scheme of things, but still constructive. But the point being, or 5-6%, whatever. But the point being that if the Nifty stays steady and does not buckle down, a lot of broader end of the spectrum sectors which are coming to the fore might have the chance to do well. So that's the key thing. I think we'll talk about this with Pankaj Tibrewal today. I think this is a material question to ask him. He's an ace fund manager at Kotak AMC. It'll be lovely to talk to Pankaj about how does he see this disconnect between the Nifty and the broader end of the spectrum at Kotak AMC when they manage both large cap funds as well as flexi cap funds. So it would be lovely to understand from him how they are positioned. Also at a time when people have said that they are constructive now more on large caps as opposed to small caps because small caps have run a bit. So good conversation coming up at 10 a.m. on Talking Point. You might want to tune in for that. Thanks so much for tuning into the Trade Setup. Have a great day ahead.